All right, we are recording. How's it going, everybody? First of all, I just want to thank everybody for subscribing for the to the newsletter this week. I'm really excited about it. I spent uh, just about all Saturday working on it, and so just kind of wrapping up here with the video, just to kind of review everything that's written in the newsletter, kind of go through some of the charts, and talk about a few of the ideas and concepts that we had here. So, the newsletter kind of starts out. I kind of wanted to talk about the what the newsletter is doing, and what it's doing is kind of getting everybody to think, especially the new traders out there, but even experienced traders, to remember that we have to consider a lot of the key time frames that are out there before taking a trade, right? And so one of the things I wanted to point out was a week or so ago, Boeing, you know, uh, basically went into the weekend and is having a really strong run up and everything. And this was not a stock that you want to take long over the weekend before the disaster happened, right? Of course, they're all in our prayers, and we hope that all this gets figured out. But there's no way that we could have known, right, on our end, that there was a disaster or anything like that was going to happen. But one thing we did know, that being long into the weekend uh, with a bearish engulfing weekly candle was probably not the way to go, right? So it had recovered late in the day, but look, what happened? I mean, so this was, we had, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right, green weeks in a row. And, when then we finally finished red, I mean, like, to think that this would, really continue to rally up into infinity is just kind of silly, right? So, you can kind of see what happens after every red week that Boeing has, right? I mean, it, usually, kind of comes down a little bit, I mean, for the most part, right? So, I mean, big red week right here, down, down, right? Red week here, down. I mean, only a couple times did it actually kind of go up. So, but especially with like this, right? This is a bearish engulfing week. So that was you know, not one that you want to kind of swing long over the weekend. Then what happened, right? So, gapped way down, and even the last week, 2 weeks ago, put in a shooting star pattern, right? And then now it's got a momentum shooting star pattern too. It could be an inverted hammer, so it could go back up off of that, and it's right at this pitchfork median line. But so that I just want to kind of hone in on that, because if you go to the daily chart, right? So what happened before they gapped down? It was a green day, right? It was green on the day, so maybe you could think, hey, it was recovering this level, but what was the other key that we could have looked at? This way, we got to look at kind of everything before we take in a trade, and uh, like Pierre HK says, on Twitter, don't unless you have to look for every reason not to get in a trade, right? And if you can't find any reasons not to get in a trade, and then you're so compelled to take it, that's when you take a trade, right? So here, right? I mean, look, the 5 MA had already death crossed on the 10 MA on the daily, right? Why would you go long in that? Why would you know what I'm saying? So unless it was a certain setup that made sense, but it just doesn't make sense to be long here. So if anything, it made sense to be short, and you could have swung short over the weekend with a bearish engulfing weekly candle, and then you would have woken up next day to a bittersweet surprise. That obviously you're profitable, but obviously it's horrible the reason that it was profitable. But still, it's and we're just trading secondary stock, right? I mean, we're not saying that Boeing is right or wrong by trading it. Um, but the point is that the technicals kind of showed what was going on there. So I just kind of wanted to start out with that, and then what I'd like to do, and I did get into a little bit. I showed some insider trading that happened before the crash. The A lot of times with the insider trading, you can take it with a grain of salt, right? You don't know what type of options they're exercising and all that stuff. When you have multiple insiders selling, right? If you go back, and I've got a little list in there from from insider transactions, you'll see that there's a lot of selling going on in February. Okay, leading up to this. Now, granted, they had huge earnings, and it could definitely make sense that people would take profit there and all that stuff. But it's just something to take note of. So I mean, maybe one of those people knew what was kind of going on with their computer system and knew it was time to take profits. You know what I'm saying? So, but they were the only ones who could have known, had any clue that something like this would happen. So, but anyway, something to think about there. So that being said, I love the weekly setup here. I love this, that we're basically testing, pitchfork median resistance. I like the fact that the 50 MA, right, is here. So that is a good potential first target, that 356 level. So for for kind of a scalpish type swing trade, and then even the cloud, it could test the cloud here at like 347, right? I mean, if really bad news came out, I could continue to go here, but I'm gonna stay still hands off of this one now until all the news comes out. But look here on the weekly too. It looks like it's about to an imminent death cross here on the 510 weekly MA, so which could lead to further downside move. And this is gonna this weighed heavy on the Nasdaq too on Friday. So no more. It didn't have any more good news, and so that helped keep the market kind of down on Friday. So that was Boeing. The newsletter, the big part of my trading these days in particular is the SPX. Obviously you could trade futures, whatever your case is there, but the SPX options are really great to trade. They could be really dangerous, so just be careful. If I do an educational alert on that, through the private Twitter stream, just get maybe paper trade with it if you don't trade SPX. But I'll be trading off of key levels, and we'll be able to hopefully capitalize on those. So, but just remember, it moves really fast, so it could be really profitable. But if it moves against you, just kind of take a step back, and don't let it affect your trading, right? So, or affect your mindset, right? Just take a step back and don't trade for a bit until you can reevaluate what's going on with the market, right? So, a good alternative instead of trading SPX is just to trade the SPY instead and trade with less, right, shares, because the SPX moves really, really fast. The SPY you can get out, with plenty of time and still preserve a lot of capital and all that stuff. So just keep that in mind. I do trade the SPX because it is fun, and you can get a 5 to 10x trade if you get on the right side of the trade pretty quickly. And as long as you manage your risk, so I do like 50% stop type area on the options. In the long run, if you have decent accuracy, you should still make more in the long run. So just bear that in mind. If you're not used to trading the SPX, just take those educational alerts with a grain of salt, and look at the SPY or look at something comparable. So basically that was that. What I want to do is I thought was really cool is that the that Thinkorswim now has quarterly charts out, which I really think is great. So I kind of want to just start out this newsletter, just kind of talk about all the different time frames. So it's sort of like an introductory newsletter type thing, and just kind of want to go through that. So yes, Thinkorswim now has a quarterly time frame, and that's really helpful to get a macro view of what's going on with the stock. You can see that the S&P 500 had this huge run up right since 2015 basically, and it was just every quarter was just green. It had a little bit of a rough go of it back in the in early 2018, and then inside quarter, and then it took that inside quarter to the upside, right, and then had a big red quarter. Now we have a pretty big inside quarter coming up, so this should be pretty interesting. If we close towards the top of the quarter, going into April, I could definitely see a break there, happening, that 2860 level, and potentially pushing to all-time highs. If not, we might see a couple more inside quarters, and with this is a pretty big bar, as a 416 point range bar, so we could see a lot of ups and downs, throughout 2019. So it makes it fun for trading, but it makes it difficult to predict long term what's going on. So just kind of want to get into that. And of course, in the the newsletter, I kind of get into talk about what's going on in the monthly. So you always want to know what's going on overall before you go into your trading day, to know essentially what's being set up on the longer time frames, right? So right now we have a doji month that's coming off of an inside month to the upside, right? So it might be stalling out right here, right? We don't know. The month, there's a couple more days left in the month, so we'll have to see how this closes out. But keep in mind we're pretty close to a doji close, which means indecision. So the next month could be up or down, right? So of course, anything could always go up or down, right? So, but or stay the same. But yeah. So anyway, what I did find interesting too, the Nasdaq was a lot more interesting, which I'll show a little bit later. But we do have a key topping tail week last week on the S&P. So these type of bars here, we have this big topping tail that takes out all these, any of these other highs. And so, basically what it shows is that the bulls try to push up and they failed, right? And it finished with a red week, so that shows that the bears were in charge. So it's possible we could get some continuation move to the downside. And then finally on the daily, what I did show was this kind of setup here. There's a really key level and a key setup that is in play, that is about to be in play. It's called the 2B reversal pattern. I quoted Trader Vic. He's got a great book out there called it's a Trader Vic's book that I've quoted in the newsletter, and it's a really good one. So it's Methods of a Wall Street Master, and so I definitely recommend that one. I have it on my bedside table, so it's a really good one. But basically, what it is we have a big pivot top right here, and as we break that pivot top, right, we look for the pivot bar here, right? And so you basically have a line over there, and whatever bar pierces through it, right, is your breaking bar. So it was basically, here or here, right, however you want to look at it. So here, yeah, in fact, it was this one. So 27.99. So basically, a break below basically 2800. Could see a further push to the downside based on this. With a stop up here, you could get some further downside. So it's a reversal trading pattern. So that is in the works, and it is also, as you can see, it is also at this key level, right? See how this was prior resistance right here. Now we have to see if it's going to become support or not. So we're really, and that's really kind of the theme of the week, is like it would be nice if we had like this directional kind of outlook. But right now we're kind of just like the month, right? Showed us we're at indecision. We're kind of at a doji. All the technical patterns that we're seeing on the short time frames are also showing a bit of indecision, right? We do have a pattern that's setting up here, which if it triggers, right, could give us more downside move. We have an open gap and an open gap that we could see a further push to the downside. So see that, but keep in mind too that we could be now creating new support, and if that's the case, just like we saw in the quarterly chart, if it does take that to the upside, then we'll get the all-time highs, right? So we are at a really key level right now, so it's pretty interesting. So I highlighted that in the newsletter and went over the time frame there. Also kind of want to talk about the a couple of the techniques that I like to use. One is the cloud, right? So the Ichimoku cloud. I've done. I think I posted a link to a lecture I've done in there on that, and it's really good. So what we've got, of course, here on the weekly. So even though everything does look really bearish, right, when we put the cloud in there, it shows that we are at weekly support on the cloud as well. So and this could be an inverted hammer, which is a bullish signal. Now inverted hammers normally come at the downside of a move, but still it is still at the downside of this move right here. So it could be just the start of a fresh new push to the upside. So we have to keep that in mind too. Again, more signals that we're at a point of indecision. So that's something to definitely keep in mind. Another thing I really like to look at is the Keltner channels, and so I went through those as well in the newsletter, and I think it's really helpful. So what we do is we look at let me go here. All right, so here we have the weekly Keltner, and these really help us look for swing trades, right? And what the Keltner channel is it shows you, the 20-minute exponential moving average with two, well, this actually is 1.5 average true ranges, which is your average range for the week at that point, and to the upside and to the downside. So everything likes to revert to the mean, right? Everything likes to come back there and test it, and so by looking at the direction here, you can kind of see here, obviously we're in an uptrend. Here we're kind of sideways, then we're uptrend. Now we're downtrend, then we have a nice reversal right here. So now we're basically back in an uptrend. So every time it tags back to the mid Keltner, you look to see a push back to the upside. Well, we're not there right now. We're at the top. So that also shows another point of indecision, is that we could be coming back down, but it's when you're in an uptrend, when everything's pointing up, you don't want to necessarily take that short, because this thing could continue to extend, like it did here, to the upside. Okay, so that's something to keep in mind. The daily, though, the daily for maybe a scalp type trade or maybe a 1 or 2 day type trade is at the mid Keltner channel, but it pierced through it, and so that might indicate, just like how this pierced through and came down here, right? Unless we get a reversal bar, like say on Monday, it might push down here to this 2760 level. So there's a couple indicators, right? So that weekly Keltner shows it might want to come back to 2730. The daily Keltner shows that it might at least want to come back to this kind of 2760 area, which also happens to be the weekly cloud area, this 2735 here, and a 50% retracement is about 2768. So those are two key levels to look at if we're if the market gets really weak. Okay, so that was that, and I did show the daily on the cloud too, to show that the cloud below on the daily. Let's see if I can find that real quick here. Is that the daily? Yeah. So look here on the daily. So obviously we have that big, this big Marubozu red bar here. What does it look like it wants to go? It looks like it wants to go this big yellow target right here. So if it did come down here quickly, right, that's 2711, but more than likely it would probably, work its way down, and that's about that 2750, 2760 level, which also corresponds to, right, that halfway point of the weekly cloud. So just something to keep in mind there as well. Okay, so we went through those, and then finally, I showed some Elliott wave, I also linked videos to some of the Elliott Wave sessions I did on the free YouTube. So went through those, of course. Here, you're just kind of looking at the S&P on the hourly chart since the December lows. Elliott wave wise, looked like we had a 1. We were traveling up the channel here, finished wave 3, right? A break of the channel shows a break in trend, and that brings us to wave 4 and then wave 5. Okay, so if that is the case, then after wave 5 comes a correction, right? And that usually is the form of an ABC somehow. So right now I just have, since we're working its way back down, it could be A, and then we could get surprised with an all-time high. It could be anywhere, or it could be expanded flat. It could be up in 3,000 and then back down to a low wave C, and then it could work its way back up, or find some other direction that it's working on there. It could chop around for the rest of the year. We just don't know yet. But right now, this kind of looks like where the Elliott wave is, in the overall with the market. So I have that in the newsletter as well. And then I went into my favorite pitchfork and action reaction. These are both Alan Andrews techniques, right? So kind of went into this. This is all the way back from 2016. Right to the this big corrective period here through 2018 and 2019ish, right at the end of the year, and then it's kind of worked its way up. And I do like how this middle line here has served as support in the past, and so we've tagged it as support here recently. If we come back down again, it would hit here, and where does it go again? At the mid pitchfork level median line, that 2760 area. So that seems to be coming up a lot. So that is definitely a theme, as a target, unless the bulls just charge full steam ahead and take us to all-time highs. And then finally on tomorrow on Sunday, or actually you'll get this on Sunday, so Sunday night, I should just say, the big review is going to be on the pivot bars, the pivot levels for the SPX, which will, if there's an indication that goes out, I've already posted this on the private Twitter stream. So you guys will have all the levels, and so we'll look to see how those play out on Monday for potential option trades with some signals. So if you guys watched the live trading session, right, you saw we successfully had a double in NVIDIA. We tried to go long SPX right here, but we had a key reversal bar here, and as it was coming back in, I just got out because we were at this cloud resistance area, and the 5MA was below the 10. It was a risky trade, but it was okay. We were way up in NVIDIA, so it was worth a shot. Especially if the market was going up at the time, so it looked pretty good. But when it failed, right, that's where, okay, it failed. Here's what's going on. 5 is below the 10. Failed at resistance, right, and then just kind of got decimated. So these are not the same levels that I traded with on Friday. It would be these. So you could see why I was looking to go long right here. We did have a daily pivot level here, and it looked like if we had a hammer there that it could possibly plow through all that. But it turns out it used that pivot level and pushed to the downside, screamed through the monthly level, and then chopped around key volumetric level in S1, back down to key volumetric level, came back up again, nice bear flag, all the way down to another key level, then lost that level again, tried with that green bar, went down, bear flag again, chopped a little bit, back down, and then worked its way into the 5-minute cloud, and then back down again with a death cross on the 5 over the 10. So that kind of shows how Friday traded, and then we'll go back and we'll put the new levels in for Monday, and I'll send these out daily on the private Twitter stream, the different levels, so you can plug those into your chart. Now remember, these only change when the month changes. The green ones only change when the month changes. The blue ones will be good all week, and then the only ones that are really going to change daily are going to be the yellow ones, which are your daily pivot levels, and then any of the volumetric levels, because volume could change dynamically, right? So we'll go through all those, and then basically I talked about some other key things. I talked about the VIX, so I'm just going to go back to the normal daily time frame right here. So I talked about the VIX. So we always want to keep a look at the VIX when we're trading. It's a great indicator. I tweeted out recently that the it looked really interesting. It looked because we hit the lower Bollinger Band here, that looked like possible tag, retag of the mid Bollinger Band. And not only did it tag it, but it launched through it. So this can give you some pre-warnings of whether or not some nasty action is going to occur, right? Anytime you close over the Bollinger Band, like we did back on 3.8, shows that pretty much that down move is over, right? Because it usually comes back from the Bollinger Band. You can usually capture a nice swing trade to the upside. So that was actually good if you map that back on the SPX on 3.8. Where it was 3.8 right here. So you saw where that VIX was closing on the Bollinger Band. Well, look what would happen if we went long here. Nice swing long in SPX. We would have gone all the way from 27.34 all the way up to 28.50. I mean, so it would just been a huge move right there. So we'd like to keep an eye on those. Okay, that makes sense, right? Awesome. And then what else? Took a look at the Nasdaq. It was very, looked at the NQ, which is the Nasdaq futures. Basically looks very similar, right? A lot of the indexes are very similar to each other. Right, nasty day on Friday. Big topping tail, but it was green. But upper Bollinger Band, upper Keltner channel over. It does look like it has some more room to go down. We went over all the FANG stocks and just looked at what the difference was between all those. So, real quick, we went through those, and let me just go. Hopefully, you guys already read the newsletter. If not, you could pause it here and read through those. But what I did is I showed the Keltner channels and what was different on the weekly time frames for all of them. So as you NQ, notice it's the top of the Keltner channel. What does it like to do? Revert to the mean. It's way over it, so there's a pretty good chance it'll come back down. Facebook was the outlier. So let me go back to Facebook Keltner. Okay, so Facebook is different, right? Because it's doing something different than the rest of the Nasdaq. So it's already tested its weekly mid Keltner. It's come back up. Okay, so that's actually very bullish. So Facebook is really the outlier of all the other FANG stocks. You can see Apple is way at its upper Keltner. Amazon upper Kelt. Netflix is the only other kind of outlier because it's already coming off of the upper Kelt, so that's another one to keep an eye on. Nvidia upper Kelt area. I think it wants to fill the gap though this week. Google ridiculously upper Kelt. Well, Tesla doesn't really count. Tesla is always an outlier. So we talk about that too. We get into Tesla as well. So we'll keep an eye on Facebook next week, and we'll keep an eye on Tesla too. Tesla is gonna, has a really interesting pattern kind of setting up. Well, not really an interesting pattern, but it's a pattern that I think you'll find interesting. If we go to the daily. Right, I drew this kind of wedge-like pattern. It's not a perfect wedge or anything like that, but the key is that we're at a very key volumetric level right here at 260. Okay, my theory is that it's going to test a larger range trend, which is here, right? This kind of 250 to 47 type level. So I have an alert set right there. If we tag below this volumetric level, I think it will get some buyers coming in and will come back up. When our earnings are 5.1, so we have some time there. I think it would push down, and just sort of like it did here, I think we could look for a swing back up. Tesla loves to hang out in horizontal channels and just mess every trader up in the world. So we'll keep an eye on that, but I do like this kind of downward wedge for a potential long to the upside. It might even tag that 260 and go long. If that's the case, I'm going to have to let it go unless something really screams out at me like a major, major setup or something like that. So the daily, right, is still kind of working its way, right? There was a doji day here. I mean, I think there's more downside, to go. I mean, the lower Bollinger Band's at 255 right now. I really think it could hit that 247 before it gets some real buyers coming in. Finally, we look at the Dow, right? It's always good to look at the Dow to see what those stocks are doing, and it was easy to look at outliers on that one. And the Dow is fun to actually use if you're, looking for things to trade because there's only 30 stocks on it, right? And 30 of the best stocks, like companies in the world, right? So basically, you always just want to look for setups to go long on them, right? So the different outliers that were there this weekend, obviously Coca-Cola, Verizon had a pretty amazing moves, but it's kind of scaring me because it's pushed up more. So if anything, if the market's really weak, I'm going to want to short Verizon because it's lagging all of its friends right to the downside. Travelers, I don't really like to trade the kind of the insurance companies, but it did put a topping tail at the upper Bollinger Band. And finally, McDonald's of the two looks the weakest. Nice topping tail, upper Bollinger Band, and could come back down and I think test that low 180 level. And and we'll get to the trade of the week shortly here. So I go through those, talk about McDonald's. Okay, so the trade of the week is on the Dow. Like I said, the best ones to trade are the on the Dow are just setups to go along because I mean it's pretty much what it's programmed to do, right? And so Nike came out. They had better than expected earnings. They had good forward guidance. They had good revenue, all that good stuff. And they just went down. And then because the market was really bad, it's almost like laughable. But they pushed this one down too. So, if we look at the 15 orb on Nike, right, here's your 15 orb right here. I didn't want to trade it because it was really big and really wicky. But if you just use the real body off of that, you could have traded that to the downside, and that would have been a decent move, that 85 all the way down to 82. So nice 3-point move to the downside was good. But I really think we'll look at the 15 orb too, this week, and I might use that as a trading setup, and I'll I'll put in the alerts, the free member alerts that comes out. But I mean, it's just amazing. And so I think it's a great opportunity to fill a gap or at least get halfway through that range. And so I think 84 is an easy target. And I think if it hits 84, the in the money calls at about zero point 0.7 delta could easily double. I think if it hits 84 in the next couple of days. So we're going to keep an eye on that as well. Just to kind of show a couple more things that look good with it. Look where it gapped down to. I know it's not a really pretty chart, but it's this level right here is a major pitchfork level here for Nike, and it came right down to the mid pitchfork level, which is a great area of support. So a lot of people don't know this or use it, but I do, and I hope it really helps you guys. So I think this is a good place that if this thing, if the market kind of is getting reversey, or the 15 orb looks good, we might take that to the long side for a trade up to 84 if it doesn't gap up on Monday to and miss the trade, right? Because we don't want to chase anything. So this is just look at that, really good right here. I had done a previous analysis of this, and I was like, how high could it go? This is the 1.618 retracement or extension, and it got all the way up there and came back in. So to me, it looks like hey, this could be like wave 1 and the start of wave 2, and then we could work on wave 3 back to the upside to the top of the back to the top of the pitchfork. So that's going to be the trade of the week. So I think it looks really good. You'll see a couple of the ideas there. And anyway, so just I hope this is really helpful. I hope you guys enjoyed the newsletter. I hope you get a bunch of value out of it. And I hope this video helps too to kind of summarize everything. So have a great night and or have a great rest of your weekend. And I'll see you guys in Twitter throughout the week. So enjoy and have a blessed week. Talk to you later.